Folks, welcome to, it ain't Thursday, it is Wednesday, hump day. So, I usually do this on Thursday nights. I will be traveling tomorrow night, so I have to do it tonight. And I will be doing a market wrap for members tomorrow evening, so you will not miss. Young, Lester, hey Bob, if you have time, INO, of course, you remember, always have time. Frank, are those tickets? Cool emoji. Thank you. I'm gonna rob that from you. Gary, happy hump day to you, my friend. WG Shocker, hello. All right, small group tonight. Hopefully it builds up. Usually I'm on Thursdays and Sundays, so I don't expect a big audience tonight. But let's talk about a little bit of analysis that I did a few weeks ago. Oh, what we're going to talk about tonight are, one, a bit of analysis that I did, and it shows you a bit of change, sector rotation that's going on in the market right now. Then we're going to rotate over and into a quick view of the weekly charts, how they look at current. Keep in mind, it's Wednesday, 2 trading days left to go. A lot can happen. So we're not going to draw any conclusions by the weekly charts. We will have a conversation, talk about where we'd like them to close. Is it significant price action this week, etc. And then we'll segue over into members' stock chart requests. Love the emoji, Frank. I guarantee, I don't know where I'm going to use them, but I'm going to be stealing those from you. I love them. Cool. Denny. Yeah, Denny, I had to do it tonight because I couldn't do it on Thursday night. But I'm glad you could make it. Okay, let's talk about the market, the state of the market. The past couple of weeks have been volatile. This week, by and large, a good week, but we've seen fading. Fading is never good in my book. So the question is, why are we fading? What's the underlying cause? Is it the market is being weak as a whole? Or perhaps is it that the group that led us up higher to new all-time highs on the S&P are now laggards, and they're weighing on the S&P 500, yet we have underlying bull markets beginning to develop? I argue that it's the latter. And I started on this thesis about 2 weeks ago, and I said, I think that prior to the election, the Dow Jones may go to new all-time highs. And if you take a look at the Dow Transports, I had it up before. Dow Transports, Bob. Let's go. People are waiting. Here we go. If you take a look at the Dow Transports, we're at all-time highs already. And we've been there for a couple of weeks. New all-time high today. Back to this chart. So what I wanted to do, since 85% of my demographic is male, Tommy, 85% of my demographic is male, we're visual. So we like charts, so I did a visual chart. And I did some overlays with colors. All pretty stuff. And over here, on the left side, is the color that, or the index that corresponds with each color. XAL, the airline index. XLK, technology index. XLF, the banks, the financials. BKX, home builders. And of course, the Dow Transports in gray. So again, airlines orange, technology brown, banks green appropriately, home builders black, transports gray, and in dotted line here is the S&P 500. And what I'm trying to do is show what has been driving the S&P 500, and it's clearly been the technology sector, and now you can see that it's vastly underperforming the S&P 500, bringing it down, weighing it down. And you can see down here where you're seeing weakness in the S&P 500, and especially technology. You're seeing the banks move up higher, home builders move up higher, airlines higher, of all things. And when you drill down, let's go to a daily chart. That was a monthly chart. Same indexes, but the relative performance in recent days has been improving dramatically relative to the S&P 500 for the transports, the banks, home builders, airlines. Let's drill down further. Let's go to a 2-hour chart. On a 2-hour basis, the transports for all of August and a good portion of July have been showing relative outperformance versus the S&P 500. Who knew? We did, because we were looking at the railroads. The railroads were breaking out. Take a look at the airlines. The airlines for the past several days past couple of days, have been outperforming the S&P 500. Think about that. The airlines are outperforming the S&P 500. Technology, weak. The banks just now beginning to come to life. You're seeing higher lows here. No higher highs yet. I think they're coming. The home builders, higher lows. No higher highs just yet on a 2-hour basis. But I think they're coming. So this is sector rotation. This is what I've been trying to drive home. And I think this chart pretty much illustrates, and we can add other sectors in here if you want to even add on for giggles. The triple Qs. We'll make them pink. Think about this. Here are the triple Qs, weak and getting weaker. Let's go back to that monthly chart. Pretty bad month so far. Drastically underperforming the S&P 500. Weekly chart. Technology and the S&P are pretty much lockstep this week, with the Qs almost in lockstep. Daily chart. Look at this. As go the Qs, as go technology, so goes the S&P 500 for now. For now. Until we see big money flows moving into these sectors. And one of the reasons why I think it's going to happen fairly soon, before the election. Sorry, folks. My throat's starting to go. My late summer, early fall cold is developing. So today I got a text this morning from fellow member Patrick. And news was out about Carnival Cruise Lines. I went over this with members earlier, but I wanted to share this with everyone. Because this morning in the pre-market, Carnival was down. They're going to sell more shares. Forward-looking guidance, not good. But is anybody shocked? So, assuming that we're going to open down and trade down, we set some alerts down here. And I said, what if we fail to close down? What if we close up on the day? Especially if we close above this resistance level here at 1669. That would be a bullish day. That would be a tell. That's telling you that the selling is probably done in Carnival. What happened today? Despite all that bad news in the pre-market and the knee-jerk reaction by traders being negative, Carnival closed up. And it all goes back to this. Sector rotation. So what do we conclude? We conclude that the country's reopening. It's reopening. And while it's not doing it at warp speed right now, the market is beginning, because it's a forward-looking mechanism. It looks out 6 months. It's looking out. It's saying, okay, we're going to get through this. We will survive. We will go on cruise line passages again. We will go on airlines again. Buy them now. And that's what you're seeing on this chart. It's happening. So I think that's a good story to tell. Let's take a look at the weekly charts so far. 2 days left to go. Usually only 1 day left to go because I do this on Thursday nights. 2 days left to go. So keep that in mind. A lot can happen. So I think the story of the week is with bonds and with the US dollar. Let's go to a weekly chart of the dollar. So we've been talking about the 10-year yield. The 10-year yield has put in a major, major bottom. The Federal Reserve is out, and they're talking about how they're going to be at zero through, 2023. That's what the dot plot says. I have a chart of it. That's not what the market's saying. The market's saying we want higher yields for the risk. The economy may not be all that bad as perceived moving forward. Now it's pretty much a train wreck. We're reopening. So bond yields are trying to break out. In fact, they already have broken out. They're trying to break out above this upper band of resistance. The Federal Reserve is the only thing holding it back. Ultimate oscillator is already broken out. Stokes are breaking out. RSI, we're still trading down below 50, but I think yields are going to break out. And bond prices, the TLT, is weakening. We tried to break out this week. We were rejected. Note the negative divergence on RSI. But the Federal Reserve is an influence here. They have an easier time of managing longer-term yields versus short-term yields. The other thing that concerns me, and this really speaks to my commodity trade, is that the tip market, while it's up slightly on the week, it's stalling somewhat. Lower highs on Stoke RSI. I'm not going to talk volume yet because we have 2 days left to go. Stokes, potential lower high here. Maybe this is a consolidation. Not quite sure. But if you see the tips come in, meaning correct, expect to see a correction in commodities as well. especially if the US dollar, which is down on the week, rallies. No new weekly high thus far. Stokes hooking up. I don't want to see a stronger US dollar with my current position. The VIX on a weekly basis, holding support at 25, down on the week, which is good. How do we close out the day today? Will we see lower lows tomorrow? Probably not. We had a bullish reversal day, and we closed back above the 50-day moving average. Stokes is still weak here. The Dow Transports, a savage index. Absolutely savage. We're off the highs of the week. 2 trading days left to go. A lot can happen. The Dow Jones, all-time high is at 29.6. We are currently at 28.032, spot 38. I think by November the 3rd, absent a geopolitical event, we will be at new all-time highs on the Dow Jones. I'm standing by it. I've been saying it for a couple of weeks now. Through the sell-off, I'm standing by it. The S&P 500 up 1 spot, 33%. Same exact for the Dow Jones. What's the comp? Comp is still outperforming. Hey, RL, I'm traveling tomorrow night, so I had to reschedule for tonight. We'll be next week back to the usual schedule. Not loving the comp. On a percentage basis, it's beating the Dow Jones and the S&P. But I'm not loving the topping action here. Let's go to a daily chart really quick. So let's bring up the Qs. All right, this is what I thought. Today was an event on the Trip Qs. And that event was that we broke down below this lower band of support. Remember, we had broken out yesterday. Today, we flashed a breakout point failure. You don't want to see us close out the week with the Qs with topping action like this. This is truly exhaustion. And God forbid. Yeah. I think it's over for the Qs. We broke down last week. Now we're trying to recapture this prior support level, and we're not being successful. I don't think it's going to happen. I warned about this negative divergence a while ago on Ultimate Oscillator. We're making new all-time highs. Take note, new all-time highs. Ultimate Oscillator peaked out way back here. Failed to confirm. So I would avoid technology in the short term. In particular, names like Microsoft. I've warned about this for quite a while. If you go to a quarterly chart of Microsoft, despite the recent sell-off, you still have RSI at 92.04. Think about that. And on a yearly basis, 93.28 on RSI. This is a mega cap. And it's the largest component of the triple Qs. And we're still trading above the third standard deviation Bollinger Band in red on a yearly chart. So I think the selling in technology is only just begun. It may take several weeks for the rounding top to occur, double top, then we roll over. The banks coming back to life a bit this week. I don't like the fact that we broke down last week, but we have an inside week so far. No new low, no new high. Maybe we'll have a new high by the end of the week. We're long of the banks. We've been long of the banks for a while now. How do we close out the day? Meh. You know, the technicals are improving. That's all the best that can be said right now. And if yields break out, the place to be, the banks. Volume was good today. Energy, huge week this week. I should have put the XLE overlaid on that chart earlier of the S&P 500 and the other indexes. So far this week, we have an inside week, no new high, no new low, a powerful week, up 4%. Biotechs broke out, LABU. This is a leveraged ETF. There are bull markets around, just not in technology. IWM weekly chart. No weekly breakout. Strong week. How do we do on the day? Topping action failed to break out. Volume was meh. XLK we've talked about it to death. Semis, same deal. Oil, huge move. Up 6% on the week. Emerging markets, of which we are long. Very good week. We're up over, no, not over, nearly 7.75% on the week. But just beware. I've been bullish on emerging markets. What concerns me is a rallying U.S. dollar. If the dollar breaks out, I will be concerned about emerging markets. So, just a word of caution. Gold up on the week, but man, lagging. We need that breakout. The gold miners have broken out. We're long of the gold miners. Silver, holding support. We're long of silver. Uranium, that's holding support. A little bit of a fade on the week so far. We'll remain long. Where are my utilities? Up on the week, loving RSI. This is pretty. The one thing about utilities is that if yields do break out, they may suffer. because they're capital intensive. They need to issue debt, and they're viewed as a higher risk versus treasuries. So if yields break out, that means their borrowing costs may increase. We have a breakout on Rsi weekly basis. So many times you'll see a breakout on the Rsi. That's an indicator leading price performance. You see it a lot. Now, I do not use it to go getting aggressively long. I'm already long of the utilities. I'm not going to use that as the primary motivator to add more to my position. It's a great thing to see. It's very, very bullish, especially since you have the fact that your stochastics, which they indicate momentum. They're rising and they're above 50. That's great stuff. RSI above 50, hockey sticking up, breaking out. Good stuff. But what's most important, no matter what, is always, always, always price and volume. Way too early to talk about volume in the week. I would love to see a breakout on the utilities. I would be looking to add more to my position on that breakout. And the breakout in RSI, the Stokes, will influence the size of the amount of shares I'm looking to put on. Because it looks as though the wind at my back is like tropical form storms building. So I feel confident that we're going to see higher highs. If it was a weak wind, I'd stay very, very small. But it's starting to build momentum. Let's take some chart requests. Answer any questions. I have a couple I need to go over for members. So if you guys want me to go over some charts, if we have time, I will definitely try to get it through to the, I'll stay on until 7 o'clock, but I need to go to members first. Nestor, INO, monster bullish day. Oh, for this version of the show, we're using TrendSpider, automated technical analysis. If you're not using it, you're missing an arrow in your quiver. Please, there's a link below, 35% off automated technical analysis. If you're new to technical analysis, or if you're like me, an old dog, we can always learn a new trick. And I use TrendSpider as my spell check for technical analysis. Click a button. We're on a monthly chart. You want to see where monthly support and resistance is? Click the button. Pop. If you had this and you weren't familiar with how to draw trend lines, you would have been able to click that button, identify the breakout, and you could have enjoyed the ride higher. They just added this. Seasonality. For those not familiar with seasonality, how does a stock perform, in this case, 21 years in any one particular month? You can go down, drill down to the day of the week or the hour of the day. I have never used the hour of the day yet. So if you're a day trader, this is good for you. I'm a swing trader. I'll go with monthly and weekly charts or seasonality bars. Also, analyst ratings. I don't use this to see what the analysts think. I could care less what they think. What I look at using this tool is, do I have a whole bunch of holds and sells? That's bullish to me. Because if I'm seeing a strong chart develop and I have a whole bunch of holds and sells, that means that I have a whole bunch of upgrades to help lift the stock up higher, so that's positive headline risk. So again, link below, 35% off, lowest price on the web, 35% off, CON35 is the discount code. All right, enough of that. I know. Let's talk about it. Monthly chart, huge breakout this month above, if you're wondering what I'm deeming to be a breakout, this volume shelf right here, 16 spot 4-5, was critical resistance back here. It now must act as support. Excuse me. Weekly chart. Excuse me. We're right at resistance. But something bothers me. And it's this. We broke out today. The problem I have is that I like the chart. I think it's going a lot higher. But now it's a matter of timing. When do I want to get in? So I can't buy it on a new high. Momentum traders could do that. I don't really like to do that because what we're doing is we're trading above the third standard deviation Bollinger Band. Anybody that knows me knows that it's like kryptonite to me. I'll short it. I wouldn't short this though. It's a farmer name. I'm reluctant to short farmer names. And you could see that in past history, it hasn't given a rat's you know what about the third standard deviation Bollinger Band. This was hell on earth for shorts. I don't want to be a part of that club. That being said, what I like to see is a correction. Just because we surged back here doesn't mean we're going to do it again. I could be wrong. I wouldn't be the least bit surprised to see surge higher tomorrow morning, but I won't chase it. I would prefer to see this. A pullback to this support level. Now, what if we did this? What if we held the breakout and tomorrow all we did was bounce around on top of this new support level? That's good stuff. My concern about being extended relative to the third standard deviation Bollinger Band, that concern goes away. So I'd like to see an orderly consolidation above this resistance line or a pullback to this support level down at 16.45 per share. It's a very volatile stock. It can happen. So longer term, I think it's a monster. I think it's going up higher. TSE. Oh, you know what? Let me go back to INO really quick. Let's talk about seasonality. $21 years worth of data, up 50% in the month of September. That drops down to 42% for October, November, and December is a rough month for INO. So seasonality moving into the winter months, early winter months, is not very favorable. So just be careful. But January is a really good one, up 62% of the times. All right, TSE. All right, so if you didn't have the automated trend lines and you looked at this chart, well, I've already been here. Let's get rid of all these. Okay. It looks like a potential V shape. And then you overlay your trend lines. Not so fast. What's good is that we closed above this volume shelf at 22.65. Loving these Stokes. Here you had your W formation. Now we're putting in a higher low. Momentum is building. The only problem is that on a monthly basis, we have resistance right here at 29.12. Weekly chart. We've broken out on a weekly basis, but let's keep in mind what I just did is I overlaid on a weekly chart. In dashed line on a weekly chart, I now have monthly resistance. In solid line, I have weekly resistance or support in this case. But above here is monthly resistance. So be careful. While so far this week, we have a weekly breakout. We have 2 trading days left to go. We don't know whether or not it's going to close there. What I'd like to see here is it close above this resistance level, and then watch as you proceed into next week, watch for a retest. And I would stay very, very small with that buy. And the question is, why? Why would we stay small with that buy? Let me see if anybody's answered it. On news, Tommy? If so, what kind of news? I don't see any dollar signs associated with it. Okay, so the strategy remains the same. I don't see anything up front. I just did a cursory glance, so I could be wrong here. I don't see anything up front where there's a dollar amount assigned to this. So it's a great headline, one that's causing people to go running in and squeezing shorts, but not enough for me to want to do the same. So I fall back to the same strategy. I want to see a retest of the support level, or if in fact we do gap up higher tomorrow and we close there, 28.25, what was that? So right now what we're doing is we're trading, what's the high of the day? $28.50. So we're right here. Nothing's changed. I want to see a pullback and a retest of support. If this thing does have legs and there is a dollar amount associated, this deal is accretive to earnings, well, let's talk about it on a close above the monthly resistance level. The way I view this right now is, and while I would love to get excited, I want to point out why a lot of people lose money. Is that headlines come out and people believe that this thing can only go to the moon. And I'm missing out, fear of missing out, FOMO. Everybody's heard of that. Only to see selling occur within the next day or two, three, whatever. It'll happen. And you may be saying, why would you see selling? It's very simple. Take a look at the bear market that this stock has been in. It hit a high of 85.35 back in January of 2018. Think about all of these people holding these shares for all these years. It's getting spiked up right now. These folks right here who have been patient, waiting, hoping, they've been looking at TSC as a red entry on the trading platform for months, if not years. It's finally turning green. They're sick of it. They don't want to make money. They want to get made whole. They're happy with that. It's satisfaction. They will sell. So these people that are using intraday charts, they're using after hours trading to identify the next bull run in this stock, they're sorely mistaken because they're ignoring all this past history. So I would be very, very careful with the price action. Show the discipline. Allow it to come to you. Allow it to pull back, or it'll be great if it managed to close above this resistance level where our alert is set. That's not that much further than where we are right now. $29.15 per share. That's not that much more to pay for stock that has proven itself worthy of being purchased because it's managed to close above resistance. There's a lot to be said for that. Okay. Roberto, NIO. Okay. TK John, mRNA. Papa Pops, yeah. Please, if you can hit the like button, please. Thank you very much for reminding me. I'm horrible at that. All right. So I'm going to start from the top here. I have RL, Fiverr, and I'll work my way down. Fiverr breakout. Actually, it broke out last week. You don't need to go to a monthly chart here. The trend is clear and defined. We have no overhead supply. We're off the highs of the week. Daily chart. It's got to close above 128.25. What did we close today? 127.33. I wouldn't buy it. Not yet. I'd rather pay more. Show me a close above, what did I say, 128.25? Yeah, 128.25. Show me a close above that mark, I'd be a buyer. Not until then. The market's telling us that we have way too much resistance above. Not a lot of resistance. We're at all-time highs. There's not a lot of history up here. So I think that it will ultimately break out. I use Fiverr. I think it's a great company. So I would wait for a closing breakout on Fiverr. WBA. Oh, Walgreens Boots Alliance. I haven't looked at this in a while. Very interesting. This is where the contrarian in me comes out. I love looking in the rubbish and finding a gem. And the only reason why I call it a gem is that we're bouncing off of a critical volume shelf. Now, it could weaken up, could close at the lows of the month. If we break down below, if we fail to close above 36, 32, I would avoid like the plague. Then it's not a gem. Then it's a piece of garbage. If we manage to close up on the month, then it's a diamond in the rough. We have probably stopped going down. I think what you have here probably is an undercut double bottom, meaning we bottomed back here in May, rallied, failed, hammered, new lower low, but what are we trying to do? We're trying to come back. If they close it, as a matter of fact, I'm going to raise this up. If they close it, what was the low of the month here? 36.65. That's the price point. I would be very attracted in nibbling on it. Not an aggressive buy. Unless there were a ton of shorts to get squeezed. I don't know that to be the case. And there you have it. We have a breakout on Stokes. Where's our RSI? Oh. Finally back in the gym, and my neck is killing me. 29.41 on RSI. Weekly chart. An inside week so far. No new high, no new low. Critical. It's critical that we close above this support level. Resistance level. And note how the automated trend lines picked up exactly where I put. That's funny. Exactly where I put my alert. That's why I call it my spell check for technical analysis. Daily chart. You don't even need the daily chart. It's got to close above this resistance level. Forget the daily chart. Pay attention to the weekly chart. I like it, just not yet. I want to pay more. Bitcoin. All right, so Bitcoin hit our price target of 10,000. Now it's above 11,000. Weekly chart, monster. Monster retest. Once we break out and above 11,700, Bitcoin's going a lot higher. So I like Bitcoin. Very nice chart. I think it could be bought. All right. Boeing. We're long of Boeing. For disclaimer purposes. Now, we bought Boeing. We were very, very patient. And I could have got it cheaper, but I didn't want to get it cheaper. I wanted to buy it smart. So we bought it here. Not at the lows of the day, but pretty much at the highs of the day. Not at the highs of the day, at the close of the day. At 160. I wanted it to close back above 160. It was critical support. It had to hold. It didn't hold the prior day. I was worried that it was going to go down lower. It did. Then it reversed, and it closed above 160. We got long. So, how do we close? Because it faded on the day. We still closed up. Came back a little bit, but it faded on the day. All right, let's talk about it longer term. Forget about the daily chart. All right, so what you're looking at here is what I believe to be, you can call this a spinning top formation. It's a sign of indecision. There's a very strong probability that this, I didn't want to draw that, that this triangle formation, I didn't want to draw that either. Oh, I know why it's doing that. Okay, that's better. This triangle formation is beginning to build. And once we break out and above 179.41, I want to buy more. Little bit, not a lot. Once we get above, because note, all of these volume shelves here, once we get above 189.86, I want to be an aggressive buyer. Weekly chart. So you can see we're heading into some resistance here. I took this alert off by accident. I want to know when we break through it. We'll keep that active for a while, and we're good to go. I don't care what Boeing does. We'll stay long of our current position until we break out and above 189.86. Then I want to buy more. Because take note of this volume shelf. There are a tremendous amount of people trying to get made whole at that level. I want to stay small until we break out and above it. Then I want to get big. Daily chart. All right, so on a daily basis, we broke out today. Now, if you're looking for an entry point, and if you're going to stay small, watch for a retest of this breakout point, and you'll get it. You're not missing out on anything here. No need to go chasing it. And there you have it. That's what I would do. If you're looking to open up a trade, if you're looking to add more aggressively, wait till you close above these resistance levels. This is a popular stock, so I'll share this chart. I drop that into the chat box, if that's what you call it, comment box. Apple, I think we've seen the highs of Apple. To me, it's dead money. You had a blow off top here. Now we're retracing. We've broken not one support level, now two. Could be that we're setting up here for a head and shoulders setup developing. You don't want to see this support level at 66.19 on RSI break. Bearish key reversal on the day. Fairly good support at 109.67. I think ultimately Apple breaks. I think you're seeing the cyclicals are coming back now, and technology is going to come in. NEO. Monthly chart. Very extended. And technically we broke a support level. We did so here last week. They rallied it back to close off the lows of the week, and they're inching it back up this week. If we fail to hold the lows of last week, it goes down to here, 13.06. There's not much data on seasonality for NEO, so I don't use thin data. Daily chart. I'd be worried here about a lower high. You know, if you begin to break out to new all-time highs, then it's all bullish. But right now, I see more bearish observations than I see bullish. I would avoid it. I don't see a compelling reason to get involved. And with that, folks, I'm going to say everybody have a great night. Members, I will be doing Market Wrap tomorrow night. No Thursday night Futures Live or Stock Charts Live tomorrow night because I did it tonight. And everybody have NEE. Jedi, I just saw that. Everybody have a great remainder of the week. Let me go over this last chart for Larry. $282.70 is the number, Larry. It's got to close above that number. It can't hold its mud when trading above it. A lot of topping action here. Every time it rallies, it gets sold off. If you want to trade it on spec, if it pulls down to 276.38, you can nibble there with a stop loss right below on a closing basis. But I'll be careful with this one. Except, of course, if it managed to close out the week above 282.70. That's how I would trade it. And with that, folks, everybody have a great night. I'll talk to you tomorrow. Be well.